So it looks like the market did bounce off this upward trend support level dating back since 2010, and more upside is to come. Watch out for this week for the FOMC meeting at 2 p.m. Eastern Time on Wednesday, May 7th. The Fed is to decide if they're going to lower interest rates or hold interest rates and then potentially increase. But the market is expecting holding rates and then potentially the Fed to communicate that more rate cuts could be coming by the end of the year. And at 2:30 p.m. Eastern Time, Fed Chair Jerome Powell press conference will be live. And then in terms of investor sentiment, it is slightly lower than previous week in terms of the bullish sentiment. So it's 20.9% this week versus previous week at 21.9%. And the bearish sentiment has increased 59.3% versus previous week of 55.6%. Now, in terms of the bounce off, the reason why I'm stating that technicals are showing more upside to come. If you look at the 1-year chart right about here, this is MAC line indicates if we're in a bearish or bullish movement. And the bullish movement has been accelerated slightly more, plus with the volume coming in more on the buy side. And then it has passed the 50-day moving average of the 1-year chart and then heading to the 200-day and 100-day moving averages. We could consolidate until the Wednesday and see what happens. But then on the 5-year chart, you could see more volume coming in on the buy side as well. And the only challenge ahead right now for the time being is the 50-day moving average of the 5-year chart, and the bearish sentiment is currently in the bearish sentiment for MAC line, but trying to potentially cross over to a bullish sentiment, indicating further potential downside or upside. Now, technically, we could have further downside, but if you go to all chart, and it is in the bearish movement, but the volume has started coming in more on the buy side, so potentially this MAC line on the all chart could be short-lived.